Hello everybody, it's Matt from Investor Trade. I've had a few requests, obviously a great response to the previous videos, to now show a little bit more detail about RSI, so Relative Strength Index. I think there's a lot of myths out there about how you use the indicator, so hopefully you're going to get a couple of good tips here, and obviously there's more in the cheat sheet, so make sure you subscribe, make sure you like, make sure you obviously sign up because they'll go into a little bit more detail, but this is just an overview for you. So today we're in MetaTrader 4, definitely a good terminal to use, great platform, definitely from a technical analysis point of view, you can do an awful lot with it. Down the left hand side is all the kind of indicators that I've got, and we can compile those to give some pretty accurate recordings. What I'm going to do here is I've literally got a Dow Jones Wall Street hourly forward chart. Really basic, there's not a lot on there. I've obviously got a couple of moving averages, moving average 9, moving average 50, and moving average 200. But this chart is about RSI and how we use it. So in the bottom box, I've actually got two RSIs together. And what we're looking at is some of the key areas to enter, key areas to exit, and how we can use them both together. I always hear relative strength index, something's oversold or something's overbought, and honestly it's nonsense. Ignore that. If anyone tells you that, just ignore it. It doesn't count. Something can be oversold or overbought for a long time. Some of the key tools which we're going to be looking at are the levels, the crossovers, and divergence. So just really briefly, I'm just going to show you now. RSI 5 is in red. Hopefully you can all see that clearly. RSI 14 is in blue. The other key point to look at is our settings. Most standard platforms will give you settings of 30 and 70, and what they'll drag you into the trap is that anything below 30 is then oversold and you should be buying. Anything over 70 overbought and you should be selling. It's just not true. So on here you'll see for RSI 5, for example, it can go way over here. There's 85 and 90. It can go above that. No issue there. We're looking at 93 as a peak. One thing you could do there is put horizontal on there. Say, well, actually going back, since September, the high that it's been at was 93. But that doesn't mean it's a sell signal. If you had entered sell there, it didn't really sell. It did after a few days, so that's not the perfect entry. We come across here, so that's not a sell signal. Price went up. Loads of times it happens, and I always see people give the illusion that that's how you should trade it, and you shouldn't. Don't do it. Don't listen. But it does give you an idea of where people might be taking profit. But some of the things we're looking at is change these levels. Forget 70, because if I put where 70 is there, I mean, look how often price is above there. Many times. That's actually, again, the clues in the name, relative strength. So if it's strong reading, that just shows that you're in a strong market. It doesn't mean it's about to turn. And again, way at the bottom doesn't mean price is going to necessarily go up. If I went to 30, look how often it's below 30. Look at all the red times it goes below. So ignore 70 and 30. Do 85, 90, 15, 10. And again, depends on the time frame, but this works well for hourly 4. One of the things we're going to look at is the crossover, and that's why we use the two together. So here, I'm just going to put the price down there. We got the crossover. Obviously, it came, right down low, really low. You could put horizontal there because that's obviously major RSI support. 4, so hourly 4. If it comes anywhere near those levels, then that's where you could potentially start looking to add longs. What we're looking at here, I mean, beautiful price action. So I've just put a line there. Let me just get that trend line. What we had from the low there, okay. First thing I know, we had divergence. So as the price was falling, you've got divergence. So price, what I mean by divergence, the price is going lower, but RSI is going higher. Bang. There's a huge clue. Second clue, at this point, I'll just zoom in. Right here, you've got a crossover. So right on this candle, maybe the green one slightly in between To get more accuracy, you can scroll down to hourly 1. At this point, so I'll put a horizontal at the point, sorry, vertical at the point of crossover. Okay, so this was the entry. Okay, I mean, that is perfect. That was your entry and price. Let's zoom back out. Let's put a price mark on here, right price label, crossed over about there. Okay, and well, I mean, look, price went up, up and away. You know, you are looking easy. I mean, the eventual peak of the move. Where are we at? Let's just put the left label on for you to see. Bang, you know, 29. So we've gone from, let's just call it 26 to 29.5, 3,500 pip move. Brilliant. You know, it's exactly what you want to be catching, because the risk reward on that's absolutely superb. It's fantastic. On that cross, you would have put, you know, I mean, I would draw here. Actually, I would say, well, this was really the support level. I mean, it is. You got several wicks come down slightly. You know, there you got 1, 2, 3. Okay, so price spike below. When those naughty, cheeky little moves, it probably took out loads of stop losses before it went on a huge run. But you would be entering here, you know, your stop loss 29, 25.9, you know, 25.750, so 200 pip stop loss. And what did we say? 3,500 pip move. Brilliant. Okay, so you miss that move. The price starts going up. It's getting rejected here. Moving average 50. You think, oh, don't really want to enter up here. You know, you got a crossover there, 50, 200. Lots of people think, you know, a big crossover, bearish market, and again, false. What we want to do, so we say, right, we missed the first move, there's going to be a retest, so we want the second move. So what we can do is, and again, not a lot of people use this, we use Fib, so Fibonacci off that. So we pick the low here, okay, we'll come up at 100 at the low, 0 around the peak of the RSI 5, it comes back down, and again, the golden ratio that I refer to, you know, not 61.8, which everyone calls that. I'm always looking really 70 to 90. That's where I want to be looking. So again, price comes down, and this was the potential region to have a look at, but you want to join the two again, just using Fibonacci at the same time and saying, right, when we're getting price and RSI, and they're both getting towards that 70 region, which obviously is pretty much there, and we've got it here, we're then looking for the divergence. So again, you look for the divergence before you enter. So at this point, so we're happy at this point because it's gone to that region. So now all we're waiting for is price to come that little bit lower. And again, a lot of people would have got in at these levels, okay? And then look what happens. It starts going up, so they're adding more long, bang, comes down, take stop losses, go. So what we want to do is get the price and the RSI to align. So they both hit as close to the 70 mark as possible. So you've got this hit here. Okay, that's still not quite there. It's not even got to 61.8. So you're going to wait. Price goes up. Then you're going to wait for that divergence. And again, what I mean by divergence, price is going lower. RSI is going higher. So you've got it there. So you've got the divergence. Bang, bang, up, down, up. So what the big boys would be doing and what you want to be doing is you want to be trying to find this level. Okay, you add. You could take profit if you want to take profit. You take profit there, but actually then you add on your second. So you're actually going to hold 2 lots. Now again, that's what 26,000. So you're actually looking at now 2 lots of 3,500 pips. So you're looking at a 7,000 pip move from 2 lots, and your maximum stop loss at any one time for both positions is probably 400 pips. So you're talking 7,000 pips versus 400 pips, okay? And again, you'll see this all the way through. You're going to be looking for crossovers. There's loads of crossovers. Look, red and blue, blue and red. It just keeps crossing. This is middle ground. You stay well away from the middle ground. If the chart you're looking at doesn't have that price, then just leave it. There'll be another chart, another instrument that you can use to look at it. But honestly, this happens time and time again. You come down to anywhere in this region, again, forget the 30, there's 30, loads of price below that. You're looking in these grey lines, hopefully you can see that on the screen. Anywhere in there, you start paying attention. You think, right, so what am I looking for? I want divergence between price and RSI. I then want obviously confirmation of what that crossover. So again, if I just zoom into this example, so I'm looking at my chart, all this is middle ground, no trade, no trade. You can scalp it, you can do it, but you're not, if you're looking to swing it, there's no trade. Comes down, you say, right, well, here's another potential area. It's dropping below the second grey line now. I'm interested in that. So we're looking, comes up, cross, pull back, and away we go. And again, for this trade here, where are we? So put the little price there. We are 27,320. Okay, and as you know, the RSI until the move ends never comes back below that point. Okay, there's the point there, 8.13. It just doesn't come back. And again, you're riding that all the way up then to 29,500 before the big drop. So this is really important. So RSI, just to give you a quick recap, we are looking at three things. Obviously, change these levels. Don't look at overbought. Don't look at oversold. It's a non-saying. It's not true. Just don't do it. It's misleading. Second one we want to look at is price divergence. So price goes lower. This is obviously, so if you're buying, then you want price to go lower, RSI to go higher. If you're selling near the top, then you want to see price going higher as RSI is making divergence to the downside. So the other option you've got as well, which you can use just to bullshit, is where you're trying to align the price and the RSI Fibonacci levels. So again, on this level, we knew, we were happy, we were thinking, great, bang, it's come into that region. We're looking for now price to come into that region. If I put the price there, we put it down there. Okay, now with this one, you'll see it stopped just slightly. It stopped up just above where we wanted to, only by sort of 20 pips. So you just have to be aware on the second retest. Ideally, you want the best level, which is, like 70 to 90. But around that level, you want to start looking. When you've got that divergence, a spring's about to come. So you've got the double test, bang, gone. Double test, bang, gone. So again, make sure that when you're analysing RSI, you are analysing it. You're not just looking for these terms of overbought and oversold. You're looking at how you can get an entry from them. It's all about the entry. You've got very small risk. Again, when you're trading those ratios of Fibonacci for RSI or price, it's really powerful when you're using the two together. So use that. Other options you've got on RSI, just to give you an idea of trends and where it could happen. As I'm looking at that, I'm thinking, price is supported. Again, when that trend line is, again, we'll do another session of trend lines and we will show you the cheat sheet. But again, as soon as, price is here, divergence, the two peaks, and yet price up here is going up, we're nervous there. We think, right, there's consolidation. And again, price doesn't always have to correct downwards or upwards. Price can correct in time. So for this whole period, we are looking at consolidation, messy. You'll see price comes below here. That's a rising trend line. And during that consolidation, price is coming below it. So you would then look for the next entry up. And there are loads of entries all over. Whenever you use it, obviously if you can't see it obviously on the hourly 4, then you can go into hourly 1, minute 30, minute 15, minute 5. So there's some great tools that you can use. Hopefully that helps. Definitely look at the cheat sheet because there's some guaranteed pips that you can make using RSI 5 and the level 20 when it does a double drop. So make sure you sign up, make sure you subscribe. Hopefully you like this video and use the cheat sheets because that will help you. Okay, don't forget to visit the page invexa.co.uk, follow us on Instagram, Facebook, and of course like this on YouTube and subscribe and share if it's beneficial.